Thanks, Dave, and I'm so happy to be here. Welcome, everybody. Hopefully, they saved the best for last, or at least someone tolerable for last. Hope so. I'm Scott Welsh, as he said. That is my website, scottwelshstrategies.com. And we're going to talk about something. I don't know if Greg would like it. He doesn't like indicators. But we're going to talk about basic indicators and can they even make us money? I hear a lot. I've heard a lot of smart people, a lot of very successful traders who don't like indicators. I totally get that. However, I kind of like indicators. It's how I learned, and I think they provide some value. So we're going to take a look and see if maybe you agree or disagree. First of all, we're going to talk some numbers tonight. These are hypothetical numbers. They're not straight out of my trading account. Please do not risk money you cannot afford to lose. You know all of the things you're not supposed to do, but keep in mind these are hypothetical numbers. I do my best to make these numbers accurate. I want to tell you the truth. I want to give you something you can actually use, but they are hypothetical. Okay, 3 things we're going to talk about today before we're done. Why we trade. Now that seems super easy and intuitive, and why would we even talk about it? But it's not, and we'll talk about that in a second. Are there tools that regular people can use? This is very, very common for me. I started in trading in 2004. I wanted to put some of the money I'd saved to work. I started from nothing. I was pretty good at math. I was a pretty good student, but I knew zero. I started with a mutual fund that I did not understand. And I feel like the people that I talk to, people I care about, people in my life, regular people, still have no idea about trading and how to make their money make money. So that's the angle I come to you from. I wanted to be regular people, normal people with no special skills. I want to be able to hopefully provide solutions or useful things that anyone can use, right? I want to make trading accessible. And number 3, obviously, can regular people beat the market? Well, we got to talk about what beating the market even is. So why do we trade? Again, it seems like a dumb question. I get it. But let me just tell you a quick story. If you don't know me, I was a high-performance tennis coach for 20 years. I still dabble in it now and then. But I would be on the court, and we're talking about people who ended up either making the Pro Tour or winning a state championship or being ranked among the best players in the country. We're talking about high-performing, super smart individuals. And I would ask them, why are you here for your lesson today? And you would not believe the answers from some of them. I want to get better. I like tennis. Like, so vague, so useless. The people who gave me these vague answers, at first I said, okay, that's nice. And we went on with our lesson and there wasn't any progress. And so it got to the point over time where I never let anyone give that answer. It had to be specific. It had to have meaning. It had to be a good goal. Why are you here for your tennis lesson became probably the most important thing we said in the first several months that I got to know someone. So here we are tonight talking. What is your reason for trading? Why are you here? It matters. It needs to be specific. Here's my reason. As I kind of mentioned, it was 2004. I was a tennis pro. I had no retirement plan. You get paid by the hour, right? Teach that lesson, make that money. There was no retirement plan. And I all of a sudden had a little bit of money. I had a nice client list. What am I supposed to do with it? That's why I got into trading. I wanted that money to do something. I had no idea what to do. Now, what's your reason? Again, email me. I'll give you my email address. Email me anytime and tell me your reason. I'd love to hear specific goals and specific reasons. But obviously, why we trade? Because we want money. All right, that's fine. But it's still too vague. Do you want to live somewhere inspiring? And can I just tell you something that's borderline not trading related? Where you live matters. If you find yourself in the doldrums, if you find yourself depressed, go live somewhere that's beautiful. I did that. I can't believe I lived in Ohio all those years. I live in Florida now, and it has changed my life immeasurably. Use money, make money, and go live somewhere inspiring. Do it tomorrow. Or you want to help out with your family. Maybe you want to help out your parents, right? They're in bad straits. Maybe you want to help out your children. They're in bad straits. Maybe you want your kids to go to college. You don't want them to pay for it, right? Family needs matter also, and they need money. Or maybe you just want to help people. Maybe you want to give back. You want to give charity. Well, if you're going to do good in the world, what makes it very easy to do good in the world? Money. Money matters. And so does your reason for wanting that money. We need to have this conversation. We're going to have it very quickly tonight, but we need all these reasons out on the table, or trading is not going to happen for you. There's going to be sabotage everywhere. It exists on the tennis court, it exists on the trading screen. If there isn't a reason and we don't have a meaningful goal behind it, it's not going to work no matter how great the system is that you hear from someone else. Okay. Now, to prove my point, this is a shot of my dining room table from about 3 hours ago. I like to stack my hundreds on my dining room table as motivation. Okay. That may or may not be true. All right. So okay, we agree. We have a specific reason for money. Fine. Okay. Where do we get this money? Hey, yeah, we all want money. Where do we get it? Well, I mean, out of thin air. Like, how do you have more money? We're sitting here talking tonight. How do we get more money tomorrow? Like, where does it come from? You have a job that you go to and that pays X. How do we get more than X? Well, you can play the lottery, which is a horrible idea because even if you win, 75% of lottery winners still go bankrupt, right? But money could come out of thin air. You could inherit money. Maybe a relative, passes away and you make a lot of money. That would be overnight. Or you could take another job, right? I hate that word side hustle, so corny. But you could take another job, you can make more money, add a work job on top of your work job. Those are all ways, but without any drastic changes, what if our money just starts making money? What if we took our life just that is right now, right? We're just regular people. We took everything we've got right now, but we had that little extra money over there. Our money started making money. Now all of a sudden, it's doable, it's attainable, it's a real thing. But how do we do that? How do we have our money make money? Okay, very, very big question. Very big question number one, right? And we have to discuss all this before we're even any good at trading. Okay, so we got to figure out our money has to make money. Fine. Second question is, what if that happens? What if our money does start making money? Well, then how do we know we're doing it right? Like, how much is enough, right? How do we know if our money starts making money if we need to do it better or worse, or we're going crazy and we're about ready for a fall, right? How much is enough? How will we know, right? And that's question number two, okay? Now, back to question number one. Oh, that's confusing. So many questions. Money making money, staying put right here, right now, in our lives without big changes, it basically means two things. I mean, how is wealth created? Go research the internet. I'm always looking around for how money makes money. Well, it's real estate, right? You buy something, you flip it, you buy it again, you flip it. If you're in a housing boom like 2006, 2007-ish, right? I personally knew people that were buying properties for a couple $100,000 and selling them for $1 million during that time. I mean, that was phenomenal. I didn't really trust it, and turned out that trust was a little bit of a problem. But real estate, you buy something and it doubles in value, and then you buy another one, whatever, or you buy a duplex and you rent out the other side, right? The real estate as money. A lot of people talk about it, right? Or we have to invest or trade. I mean, that's it, right? If we're not going to do a job and all that other stuff, we got to start in real estate. We got to start that tomorrow. We got to do investing and trading. Now, we're not here to talk about real estate, so let's go to the second part. If it's investing or trading, I'm going to ask you again, how do we know? Like, we're here to learn about trading. Like, how do we know? How do we know we're doing it right? We have to have a metric. If it is measured, it's managed. If you don't measure it, it doesn't exist. Measure anything and you'll achieve your goal. Measure your diet, measure your trading, measure anything. We need a benchmark. A benchmark lets us know exactly how well we're doing and if we're doing it right. A benchmark tells us how much is enough, right? If we're making enough, well, of course we can say, I want $8 billion. Maybe that's enough. But we need to know something realistic so that we can repeat it. And we're not just crossing our fingers or whistling in the dark, right? How much is enough, Gordon? How much is enough? Well, we need to know that. Well, here it is, right? And you can change your goals, But here it is. I mean, this is it. This is worldwide. This is it. We have to do as well as the market, the stock market. That's it. That's our goal. That's our benchmark. That tells us if we're doing it well or need to do it better. Why? Why is that? Why is it not $10,000 a month? Because the market can't be beat. Just ask all the academics. Well, not all the academics. Ask the market is efficient academics. It can't be beat. So if we do as well as the market, we can't do better. So if we do as well as the market, victory. We've done it. So if we do as well as the market, according to the experts and the academics who believe in it, if we do as well as the market, think about this. The market is guaranteed to make money over time. The stock market goes up. How far back do we go? I've seen charts back to 1907 or so. Have you seen charts that far back? It's fun. Take a look at them. A lot of railroad stocks. But it goes up. The Dow doesn't go backwards. The Dow wasn't at 150 in 1929 or whatever, and now it's at 142. The stock market always goes up. That's it. We have a guaranteed success rate. We are guaranteed to have our money make money. All we got to do is do as well as the market. Don't believe me? Google Mr. Money Mustache. His blog is world famous. He is a person who actually is doing this. He believes the market can't be beaten, right? And I know I was saying that wrong. I was saying it in a cliche. He knows the market can't be beaten. So he made a lot of money at 30 in an engineering job, put all of his money in the market index fund, and has been living off of it since he was 30 years old. And I think we're going on 10 years now plus. Google it. Real life. He retired, and all he does is equal the market. And his money makes money over time. Plus Jack Bogle, RIP, rest in peace, Mr. Bogle. Tony Robbins tells you, no, you can't beat the market, just equal the market. And Warren Buffett says, if you're not a smart person and you can't research, then just buy an index fund. Warren Buffett told us that, okay? Right? So you see how powerful this benchmark, look at the people on the screen that tell us what our benchmark is. If we're trading, we got to equal this number, okay? If we're going to talk about trading or investing, we're going to combine those into one topic. And here's what that means. It means buying the market via an index fund. And that is it. There's your tip. Go do that tomorrow. Put all your extra income and go buy an index fund. That's it. We're all done. Thank you for coming. It was great, everybody. And a round of applause. Thank you, thank you, thank you. Wait a second. Is it though? You see the power of this benchmark? You see the power of the people who tell us this is our benchmark? These are smart, famous people worth billions. Is that really the best we can do? Really? This market that is so great via an index fund, it's guaranteed to go up. So far, that's 100% true. And you know what else is guaranteed? It's guaranteed that it's going to drop at least 50% every so often, right? It's guaranteed. Don't believe me? When was the last time it dropped 50%? 2008, 2009. Dropped 50%, right? Didn't it? It's about 10 years from now. That's been about 10, 11 years ago. We're kind of due for something like that again. Whatever, that's just history. So this great market that we're trying to equal, that we cannot beat, wow, it's going to drop 50%. Raise your hand if you can handle a 50% drawdown. I don't know anyone who can handle a 50% drawdown, or at least handle it well. So please email me and tell me how much you love 50% drawdowns, because I hate losing a trade still very much, right? I don't know about you. Oh, and didn't the market go down last year? Market was down over 6%, right? If you're an index funder, you were down over 6% last year, right? So it has losing years, okay? This market that everyone's supposed to do, it loses for an entire year. That's part of it, right? So it's down 50%, it loses. Oh, here's a fun fact, ready? From March 2000 to March 2013, it made zero money, the market. Zero money. Look up your charts, right? Look up your S&P. You made zero money in over a decade. You'd have looked at your accounts, oh, my account's worth $100,000. Come back in 2013, still worth $100,000. It was negative all that whole time until it got back to even. That's really the best we can do. Seriously. That's a period. That was actually, this was taken from 2000 to 2013, time-lapse photography. It wasn't great, okay? The academics who believe in efficient market say we can't even do it. Jack Bogle says we can't do it. Buffett hints that we can't do it. Tony Robbins tells us we can't do it. Mr. Money Mustache tells us we can't do it. But what if we want to try to do it anyway? Okay, then. Let's try, right? That's why we're talking here on a beautiful Tuesday evening, right? What tools can we use? We regular people, not anyone who's a superstar, just a regular person. Are there tools? Well, there's our gut feeling. Is that a tool? It helps at the blackjack pit in Vegas, maybe, but it doesn't really help us in trading. We are hardwired to fail at trading, right? Our emotions are horrifyingly bad for the skill of trading. So we don't have a tool. That's why people fail. That's why people like Tony Robbins writes 2 books about it. Because if we don't have tools, we fail. We're programmed to fail. Well, how about this tool? How about an off-the-shelf indicator? How about an indicator that comes on all of our platforms? Can we try that? Okay, because even if we find a method, even if someone tells you a great method, remember, psychologically, we're naturally inclined to screw everything up. So even though we want to do that system that someone teaches us, if we have to think for ourselves, there is danger. Doesn't mean you can't do it. Of course you can do it, but it's dangerous. What if we take it out of our hands and out of our psyche, out of our hands? No more worrying about, ooh, my judgment on that. I got a little too emotional, or my trade size is too big. What if we just forget all that and use a tool that takes it out of our hands? How about a basic off-the-shelf indicator, right? I love talking about off-the-shelf indicators because they're such easy to access tools. And if we can rely on the indicator, take the emotion out of it, then maybe we can win. Okay, so what are these indicators, right? Somebody, remember years ago when these were created, a lot of them were created in the 80s or before, somebody was looking at charts by hand and started seeing some patterns like, when price rises rapidly, it reverses back. I'm gonna write a formula for that. And they puzzled and they puzzled till their puzzler was sore, and they came up with an indicator. And it was so good, it made it into something you can see on a screen. And then it was so good they decided to share it. I mean, that's awesome, right? Smart people using complicated math to give to us. They use the charts by hand, and now we have it without any sweat at all. Isn't that amazing, right? Isn't that amazing, these indicators? I know they get kind of poo-pooed, but I just find them amazing, and they're free. They're free for everyone. So we all should get around and have another standing ovation, right? Hooray, right? It's hard, though. Am I right? And do you agree? It's hard to believe that a free indicator that everyone has can beat the market. Doesn't it feel like Vegas? You know, in Vegas, when they give you that basic strategy for blackjack? Oh, so this is how you beat blackjack. And they gave it to me for free. So why isn't everybody rich, right? Doesn't it feel like a little bit creepy? Because that's the way I felt. Like, I don't gamble in Vegas because the odds aren't with me, right? I love Vegas, but I just don't gamble there. But indicators feel a little bit like that to me. I don't know how they feel to you. But so some smart person put this on a chart. He used it or she used it, but it's free? Like, it's not really going to work, is it? I mean, is that bias maybe why people don't like them? I mean, I understand. It's a tough one, right? It's something to think about. Well, let's stop talking and all this theory, even though this theory is so important. Let's take a look at just one indicator. It's basic, it's everyone's platform. Let's take a look, all right? Now, there are a lot of indicators that come on your platform. My favorite platform of all time was TradeStation. That's where I started. Actually, TD Ameritrade first to just trade stocks like a wild fish in the ocean. Do fish trade? I traded in TD Ameritrade when I knew nothing and just pressing buttons like a moron. Then TradeStation when I got a little more advanced. Then automated strategies on TradeStation. Then TradeStation stopped. And then I've used multi-charts because that's like TradeStation. Love that. and MT4 now I use a ton for Forex, okay? So all those platforms, guess what they all had? All of these indicators, right? Bunch of different platforms and they all had them, okay? But there's one that isn't really talked about, and that's the CCI, the Commodity Channel Index. It's an oscillator, which I know a lot of people hate, but I'm just going to keep talking anyway. I love oscillators. I just love them because they go up and down, and price, for the most part, follows them. And right, if you just follow it, oh, look, it went from overbought to oversold, and it does that over and over again. Take a look at a chart. Pull it up. Put an oscillator on it. Just default settings. I don't care. Watch how many times it goes from overbought to oversold. Huh, if you bought there and sold there, well, that made money, that made money, that made money. Not always, of course, but that made money, right? It's crazy. What the tool still seems to be effective, but you can't just blindly just slap around strategies. I mean, you do have to have a plan, right? But I love indicators. I specifically love oscillating indicators. I love the RSI and I love CCI, and that's what we're talking about tonight. Oh, did I mention it's free? It's free, okay? Smart people, smart math, easy to read, easy to understand. Great, can it make us money? Well, let's get to it. I've applied the CCI to everything. Futures, yes. Stocks, yes. But today we're going to talk about Forex. Why Forex? Well, love leverage. We want our money to make money. So Forex will do that if we can somehow master it. Now, people have told me since I started studying trading back in Forex 2009, I started in Forex, that Forex responds better to technical analysis than anything else. Is that true? I have no idea if that's true. I don't know what that even really means, but I do know that I've put thousands of hours of technical analysis on Forex, and it seems like it might be doable. So anyway, we're going to talk specifically about the euro dollar. We're going to talk about one thing, so simple, regular people. We don't need complicated. Okay, now why the euro dollar? Did I cherry pick it? I mean, you'll see the numbers. You can decide for yourself. But I just did a YouTube video last week. I'm doing a newsletter on it this week. Guess what the best currency pair is to trade? Guess which one? I'll give you a hint. It's on your screen. The euro dollar is, and I go into all the reasons because it's kind of a silly discussion. But that's why I'm using it. Because if you're a Forex trader and you want to get started, start with the euro dollar. That's my recommendation. Go watch the video if you want. Okay, here are the settings. This is on MT4, right? I told you that's one of the platforms. Great platform for Forex. Oh, it's free. Everything's free. It's amazing. Euro dollar with the CCI, okay? And here we go. The CCI changes from overbought to oversold. Kind of a weak name, the CCI. Anyway, first thing we have to decide, well, are we going long or are we going short? You look at this oscillator, it's like it goes up as it goes down. Well, how do I know which way to go? Easy. Let's put a filter on. And I put the 149 period simple moving average. Why 149 and not 150? I tested it. I mean, 150 is fine. Okay, I just tested it. I didn't test it hard because filters, anything between 100 and 200 is fine. I love 60 period moving averages for filters. I even kind of like 30 period, but mostly I love it for daily charts. I love the 100-ish and above. So 149, okay, that's our filter. If it's above 149, the trend is up. And we'd like to go with the trend. Yes, please. So if it's above the 149 SMA, we go long. And if it's below, we go short. Is that simple enough? It's easy. There are a lot of ways to filter. I just did a simple one, okay? You can do it when the momentum indicator is above zero, the trend is up. You can do it when the MACD is above zero, the trend is up. There's a lot of ways to do it. I did the SMA. All right, let's get the CCI length. Now, it's another discussion and another topic, but the long side of the market and the short side of the market are not the same. Not the same traders, not the same velocity, not the same personality. I can only tell you that from going on, I don't know, 5,000 hours of research. You can decide to use the same settings. I'm fine with that. I'm just telling you what I found, okay? And for this system, the long is set to 30. I think the default setting is 14. Did I optimize a little bit? You bet your butt I did. 30, right? Now, are there other ones that work? Yes, but I'm using 30. And for the short, we want the CCI to be set for a length of 13. Why 13? Because I tested it, okay? Oversold and overbought, just as it comes. I didn't mess with that at all. Oversold, when it goes down, we want to see it go below oversold, which is on the CCI under negative 100, a reading lower than negative 100. And for overbought, if it goes up, if it goes above 100, we'll consider that crazy and it needs to revert back downward. Okay, that's important when we look at a sample trade. Length for long 30, length for short 13, negative 100, 100. Okay, we need to take profit, TP, take profit. We are setting this in our brains and maybe even in our screens. 77 pips, 77 points. If you'd use the generic term, 77 pips. The stop loss is set to 128. I know it's bigger than the take profit. That's another discussion. I've talked about it quite a bit. Just going to have to see the numbers and decide for yourself. The profit to draw down is right around 6, right? We'll take a look at the numbers. It's very 6-ish, okay? I went too soon. It's around 6, but we'll get the exact number shortly, got it? But I do that because when we compare it to the market, we're going to need to know that number. All right, here are some sample trades. These are from 2019. This is, as promised, the euro dollar daily chart, 1 day. This is using the multi-charts platform, which is exactly like TradeStation. You can trade Forex on multi-charts. That's why I'm showing it to you. If you wanted to start tomorrow and buy multi-charts like I did, get started. You can do it tomorrow. Here we go. This is the most recent trade from February 2019. And here's what we want to do. Price is below our filter. This is our simple moving average. If price is below, we go which way? Short. If it were above, long. We're only seeing short trades on this example because it's so simple. I just didn't feel like I needed to show you longs, but it's exact opposite, okay? When our CCI oscillator goes above, into, over 100, and closes, dramatic, we sell because we're waiting for it to drop back down. Take a look at this. When it goes to here, it goes to here, oscillate. When it goes to here, it goes to here, oscillate. Here to here. Anyway, that's what I was talking about, right? I think indicators are amazing. So price is below, we're going short, closes into overbought, we sell, we set our take profit, which was what? 77 pips. We set our stop somewhere up there for 128, and that's it. And that happened to be a successful trade. Fantastic. Here's a trade also from 2015. Same thing. Price is below. Now we're only talking about closes. You can see how this pierces the line. Don't care. We just want the close. So you can wait for the daily close. How easy is that? Price comes up, closes right here. Take my word for it. And on the close, we're going to enter short, set our take profit, and we got it there. This one didn't work out, unfortunately. It's below. Price went into overbought, and we got to stop out. So it doesn't win every time. That's unfortunate. Can you figure out then the longs? Price is above, closes down into oversold, and then we set our take profit once again. Okay? Make sense? Let's move on. Now these are the hypothetical numbers that I promised, okay? I would love to go over all of them, and I'm very sorry, not all of them, but I'm very sorry that it's small, but I'll read them to you. The total profit trading one lot from 2005 to 2019. This is a multi-chart performance report, $31,000 of profit, right? Over that, okay? You can see that the account size required is only there, but I pretended it was a $10,000 account. Fair enough. The maximum drawdown was $6,300. At the time it happened, when my account dropped $6,300, that represented about a 25% drawdown. So it's not 50, 25. That's when it happened. Now, theoretically, the first time we start trading this, we could have lost 6,300. And that's much higher than 24.99%, obviously, right? But we could consider, is that too much trade size? We could always lower it, but that's something to keep in mind. What are the chances that as soon as you start trading a system, you're going to get the worst drawdown in the last 14, 15 years? It's not likely, but it's possible. So be conservative if you want to, right? But the worst drawdown in this case came after we had started. It was only 25%. Profit factor is well over 1. That's good. See the winning percentage overall, 72%. I mean, that I can live with that, right? And the buy and hold return, if you just bought the euro dollar, you would have lost money. Okay? Not bad, right? I mean, hey, oscillator made money. Right now, let's not get crazy, okay? Going back to this one. This is trading one lot every single time. Okay? Oh, we take a trade, one full lot. And we win or we lose, whatever. One full lot. Take a trade, win or we lose. One full lot. Never changes. What if we go on a winning streak? What if we make $10,000? I kept it the same. Right off the top of your head, does that sound like maybe we could do better? Right? If our account is bigger, couldn't we theoretically risk more? We could, right? I mean, what did Warren Buffett say? Compounding is the 8th wonder of the world, or maybe it's the 9th wonder, right? 10th? Anyway, we could compound it. Okay, this did not. It made 31.6, but it did not compound. Okay. Oh, by the way, I always put trading costs in. See this? I get a realistic estimate of slippage and I take that out. So this has trading costs built in, by the way, right? I build those in. Hopefully trading costs are not that high, but I always build them in. All right. Now we're switching to another platform. Maybe you're a Forex MT4 trader, okay? Keep in mind that if you're testing on MT4, it's very much useless if you don't have good data. I've tried it for years. I tried it without good data. I broke down, I purchased data with my own money. This is 99.9% accurate data. This data is accurate. And I've compared it to my other platforms that I trust implicitly, and this is absolutely phenomenal. So spend the money if you want to test on MT4, or just don't. All right, initial deposit, right? Sample $10,000 account. And again, sorry, the numbers are kooky. But instead of $31,000 profit, can you see? $305,872. What's the difference? Compounding. If the account goes up, the trade size automatically goes up because this is a robot. I am a robot trader. I hate pushing buttons manually. I started discretionary, but I'm a robot trader now, so I just have the robot do it for me. Done automatically. You could do it manually, easily. But that is a big difference, yes? If you compounded, we didn't add money to our account. We started with 10. We didn't add anything. We didn't do a darn thing except raise our trade size as we did well. Compounding might be something to look into, right? Now, whoa, $47,000 drawdown. Well, what if we started with 10? Well, this is well after we had compounded. Understand? Hopefully that makes sense. This happened after a profit had gotten into the hundreds of thousands or several thousands, because it's impossible when we start. Our trade size is about one lot when we start, just the same. So this only happened after we had made a lot of money. That doesn't mean it'd be easy to lose 47 grand, mind you. But see, it only represented 24% of the account. That was only a 24% drawdown. So we had done very, very well up to that point. Okay. And there are your win percentages on MT4, about 75% for short, 75%. So, you know, about the same. Okay. Now, one final point. This also, when it closes into overbought, you can just take it at the open of the next bar. Some people freak out because, especially if you're trading in 5 p.m. Eastern time, oh, the spreads are wide and then all sorts of crazy stuff happens at 5 p.m. You can just wait for the next bar to form and then take it at the open. I have robots that take it at the close and robots that take it at the open, and guess what? It doesn't make a bit of difference, okay? The multi-charts took it at the close, the MT4 took it at the open of the next bar, okay? So don't get stressed out about that. When it closes into the proper conditions, just take the trade, right? Open the next bar or whatever, right? That's important to know, okay? Now, that's all great. How did the market do in the exact same time? Well, I just looked at the SPY and the profit, the total profit. If you $10,000 of stuff, right? I have $10,000. I put it in the SPY, the ETF. It made just under $11,000. Now remember what the euro dollar was just trading one lot, 31,000. This was just, there was like 10,800 or something. I just rounded it up. The maximum drawdown on the SPY was minus 7,500. Remember what the worst drawdown was? 6,000, 6,200, right? Something like that. So less drawdown, 3 times the money. Obviously, it only took one trade, right? Buy and hold. So I made 116%, but trading without compounding did about 3 times better. Profit to drawdown, right? A profit to drawdown was only what, 1.4? Well, 31 divided by 6, it's like almost 6, like between 5 and 6, right? If you divide 31 by 6, or let's say 5 to 1 instead of 1.4 to 1, okay? So did a basic off-the-shelf indicator beat the market? I mean, if you look at it just trading one lot each time, it seems to beat it quite handily, right? I mean, I'm not trying to trick you, just giving you facts. I just want you to have information. One currency pair, one off-the-shelf indicator, little bit of optimizing, killed the market. And if we compound, I mean, if we compound our gains, if our trade size goes up as we go along, 300 grand, 10 grand, right? 11 grand. So can a basic indicator do better? Should we believe that we can't do better? I'll leave the final decision up to you, but it seems like to me that indicators beat the market. And if we beat the market, guess what that means? We're doing awesome. We're better than just about every trader in the world. Now, one final thing before I wrap up. Does this number include dividends? No. So would the return be higher? Yes. Dividends are the greatest thing on earth. Are they? Look up Meb Faber. Just look him up and look up what you don't want to hear about dividend stocks. He is huge anti-dividends because they are taxable like crazy. He doesn't like dividends. He makes a compelling case. I didn't put dividends in, but let's go ahead and bump it up if you want. Of course, you have to take taxes out, so don't bump it up that much. But it doesn't matter. It's not getting to 30,000, right? So that's my point. All right, let's wrap it up. Bottom line, we need money, but we need specific reasons why. We need to grow it, but we need specific reasons why. We could just stop and buy and hold, get that index fund, or we could trade and do way better, right? And this magical thing that I gave away for free with our free indicators on a free trading platform, it's for everybody. It's basic indicator. That's it. Start trading this tomorrow. First test it on your own. Start doing it tomorrow. So why not? Like, well, why wouldn't anybody? Well, maybe you don't trust me. I'm just a guy on the internet. But it's a daily chart. Maybe it doesn't trade enough, right? Doesn't trade a ton. And it will have losing years probably too, right? Just like the market. So there are a lot of reasons not to trade it. But if we're going to compare to beating the market, I mean, why wouldn't we? All right. That is all. That's all I got. Oh, one final thing, by the way. It's not the only instrument, right? CCI works on a bunch of things.